Can I get a mortgage if I'm self-employed? Hi guys, it's Sam and welcome back to our YouTube channel. For today's video, I'm going to be walking you through the basics of self-employed mortgages. But before I do, make sure you hit that subscribe button. Okay, once you've done that, let's zoom in and get started. It is absolutely possible to get you a mortgage if you're self-employed. It can be more difficult compared to someone who's employed, but only because you'll need to prove that you have a reliable and sustainable income. But proving you can do that and the affordability stacks up, then there's no reason at all why you can't apply for a mortgage if you're self-employed. So let's start with what documents you'll need to have on hand for your broker or your lender if you choose to go direct. Now, you'll need all the usual documents, like we say in a lot of our videos, such as your 3 months bank statements and your credit report and ID, but you're also going to need to have your certified accounts as well. Now, usually you're going to need 2 or more years of your HMRC SA302s, which is your tax form and your tax year overview from HMRC. And we, as I said before, we do need to cover the last 2 years. If you're a contractor, you may also need to show evidence that you have upcoming contracts. Company directors may need to provide proof of dividend payments or profits within their business. Now, we do have a document checklist which you can download either via the website or using the link below. But what happens if you haven't been self-employed for 2 years? It can be very difficult to get a mortgage if you're newly self-employed, but there may be exceptions, such as if you were employed previously and will be continuing the same line of work, or if you have a super large deposit. Some lenders may offer you a mortgage if you only got 1 year's sets of accounts as well, or a 12-month trading history. However, some lenders may require that you've had previous experience in that field of work. There are ways you can improve your chances of the application being approved with things like saving a larger deposit if possible. It's easier said than done, I know, but having a larger deposit means you'll have a larger choice of mortgages and potentially access to the better mortgage rates too. Boost your credit score. Now, the better your credit score, the better your chances of being accepted for a mortgage. Plus, you may be able to borrow a little bit more with a cheaper interest rate. Get yourself an accountant. Now, some lenders may require that your accounts have been prepared by a certified, qualified accountant. So make sure we've got one of those ready. And limit the amount of expenses that you sign off. If you sign off lots and lots of business expenses in the run-up to applying for a mortgage, it might mean that your actual income on paper is reduced because you've been expensing everything. But when it comes to your affordability, then it's pretty straightforward. If you meet the mortgage lender's criteria, they're usually going to go off an income multiple of 4.49, and they times that by the income gets the borrowing ceiling. The maximum most mortgage lenders will let you borrow is 4.5 times, but some lenders will allow you to borrow up to 5 times your income, and a small number of specialist lenders can potentially offer you 6 times, but in very, very limited cases. And again, it all depends on the lender, so it's best to work with a self-employed expert who can find you the right mortgage to apply for. And that's it for today's video, but if you want to know more about self-employed mortgages or have any questions, then let me know by leaving a comment below. And if you've liked today's video, then make sure you go ahead, give it a thumbs up. Thanks for watching, and I'll see you next time.